afternoon. Welcome to the market segment. Asian stocks edged lower as market players surmised that a US rate cut this month looked unlikely, given a higher than expected inflation print coming out of that country yesterday. Some say the latest 2.7% CPI print suggests that firms have started to pass through some of the tariffs that kicked in as a result of the Trump administration's trade policy. The Nikkei share average ended the session flattish, down 0.037%. The Hang Seng Index declined by 0.3%, while the Shanghai Composite Index ended the session down 0.03%. US markets largely registered declines yesterday, with the tech counters managing to close in the black. This as the latest CPI print for June came out at 2.7% higher than market estimates, which on the face of it wouldn't be supportive of a rate cut. Meanwhile, there's already talk of an individual who's been identified as a front runner to take over from US Fed Chair Jerome Powell, Kevin Hassett, in 2026 when Powell has served his term. The Dow Jones Industrial Average declined by 0.98%, let's just call it 1%. The S&P 500 lost 0.4%, while the Nasdaq Composite Index ended the session up 0.2%. Looking at local indicators, the all-share index is a tad lower at 96,984 index points. The rand is trading at 17.92 against the US dollar, 20.81 vis-a-vis the euro, and 23.98 against the British pound. Gold is trading at $3,337 an ounce, platinum at $1,386 an ounce, while Brent crude oil is trading at $68.38 a barrel. All right, and so we get into it with Chantel Marks. She's the head of equity research at F&B Wealth and Investments. Thanks very much, Chantel, for joining us. So the latest US CPI print seems to be telling a negative story about the impact of tariffs, and these are still the low ones.
Yeah, I mean, it was a very strange print because even when I was trying to figure out whether or not it was in line with expectations or higher than expectations, it was very difficult to get that exact point estimate because depending on what data aggregator you were using, it was completely different, which is in itself unusual. But what we can say is that the trend is upward. So inflation did move upward. And it's difficult to also say whether or not that's a tariff impact or not. So it does seem as if there could be something in there, particularly in food prices. But one of the biggest reasons why inflation moved up was because fuel prices came down by less. And we know that there wouldn't be a tariff impact yet. But certainly investors and economists are sitting up and noticing this increasing trend. And I think from a Fed perspective, it's kind of emboldened Powell as well because he wanted to adopt a wait-and-see approach, and President Trump just said cut, cut, cut.
Indeed. So markets are generally down. Do we expect this to be the tone, at least until we get into August, when the US tariffs actually come into effect? Because there's still negotiations going on. We don't really know what's going to happen up until the 1st of August.
Yes, so I do think that that's going to be the tone around tariffs. But of course, there are many other layers attached to market performance. What we've seen so far in the last 2 months really has also been a function of summer holidays. I know some commentators have called it a melt up. So kind of a slow movement upward, and the upward movement being the prevailing trend due to lower volumes. But what we are seeing now is that market sentiment is also being dictated to by second quarter earnings. We've had some of the US banks report results. We've had a couple of other companies come out with results, and generally it's been better than expected again. So even though we have this cloud hanging across markets, something like a really strong earnings season could provide a leg up.
And I understand that we're likely to start getting the tech results coming out later this week. What's the expectation from those?
Well, the tech results we think will be pretty strong. You do still have that structural AI narrative that is playing out and that really is supporting earnings growth and enthusiasm around the tech space. So I think that will probably support them for this quarter still. I think what's going to be very important is the outlook statements. How do tariffs and trade discomfort impact the companies in terms of their outlook. We've had one tech stock, it's a European tech stock called ASML. They're the guys who build the machines that make the chips, release results this afternoon. And even though results were decent, they withdrew their guidance for next year because they just said it's just way too uncertain, and the stock was sold off heavily as a result. So something like that can also be an issue.
So Chantal, it's interesting to see that luxury retailer Richemont posted healthy results in the second quarter of this year, showing sales up 6% at constant exchange rates at 5.4 billion euros. Despite all the goings on in the world, the well-heeled still seem to be buying.
Yes, and specifically they seem to be buying jewelry, which is an area of the market that Richemont is over-indexed to. So if you look at other luxury groups like Louis Vuitton, for example, they have a very big liquor portfolio, they have a very big leather goods portfolio, but within that space as well, demand for jewelry has been holding up while everything else has declined. So Richemont has benefited from that. Most of the growth came through from jewelry. There's also some question marks on whether or not US consumers have been buying jewelry prior, or branded jewelry at least, prior to higher tariffs being implemented, rather, because we did see a really strong growth number coming through from the US. Of course, the question is now, will this higher sales number and better than expected sales number translate to better profitability? I think we'll only know that once we get the full print. But the suggestion at the moment is that high gold prices and these tariff impacts could really drain on margins. And even though sales are holding up well, earnings could be an issue for them.
Chantal, thank you so much. So much more to ask you, but we've run out of time. That was Chantal Marx. She's the head of equity research at F&B Wealth and Investments.